The Journal this morning is reporting details of the deal still being worked out, but John Hilsenrath is with us this morning. Your thoughts on this deal for ZTE?
Well, you know, I think there's a lot to look at here with ZTE, with the auto tariffs coming down, and then also with the broader parameters of this deal that they announced yesterday, where the Chinese say they're going to be increasing imports of agricultural products and of energy products. When you add all this up, it doesn't look like the U.S. is getting a ton. You know, we were talking about $150 billion of tariffs. We're getting, you know, maybe a little bit more on the export side on autos and maybe a little bit more on agricultural and energy products. It doesn't look like a big win for the United States.
No, it doesn't at all. In fact, when you look at the real important issues as it relates to China, it's not doing anything at all for American business in this deal. And that is the theft of intellectual property, the forced transfer of technology that China does from American companies to Chinese companies. Even the opening of markets is an issue. But those two top issues are not addressed in this deal.
You know, I wonder how President Trump's constituency is going to look at this. You know, when you look at ZTE, you know, there's a big effort to kind of keep that company afloat. How many American companies have basically closed down and shut down over the last couple of decades because of competition from China? Now, I realize it's a slightly different issue. You know, we're talking about ZTE breaking our sanction rules on Iran and North Korea, but, you know, we helped them keep that company afloat. How many of our companies never got to see the light of day because of Chinese competition?
I mean, I would think especially from the Treasury.
Point out that you were there in China when there was this spat between Peter Navarro and Secretary Mnuchin. This whole deal looks like it's being driven by Secretary Mnuchin, globalist, and not driven by those who really crafted Trump's trade policy, and that would be Peter Navarro and Robert Lighthizer.
100%.
I mean, 100%. I was going to say that. I mean, I think you have to, if you look at it from the Treasury Secretary's point of view, I mean, I think the victory, such as it would be from, you know, where he and his supporters would see it, would be on a couple of fronts. I mean, number one, in terms of political constituencies, I mean, the president was dealing with some issues in the farming community in the United States, which would play into the midterm elections this year and certainly for his re-election in 2020. So any deal that's being hammered out could help him there. And the second thing is what we're showing on the screen right now, and that's the stock market.
That's
and
exactly
the president
right.
himself talked about this last week and saying, hey, the one thing that's holding back this market is what's happening on trade. So I think Mnuchin, his supporters, and the president knew that looking like you're moving towards a deal, even though I agree with the larger points that John is making, is going to help you in terms of the stock market. The one thing I'd say about the auto tariffs being lifted here, though, is that we could make too much of this, or people looking at it could make too much of this, because remember that a lot of the cars, a high percentage of the cars that are sold by U.S. automakers in China are not imported. Many of them are manufactured in China, so would not be subject to tariffs to begin with. So it's a pretty easy give for the Chinese.
Let's look at those numbers of what the market's done since those are the steel and aluminum tariffs when they were first announced March the 1st. About 300 points of that 404-point gain on the Dow, that was just yesterday. So, again, the Dow has really been kept in check by this. This is a spat that we started. So any pain that the farmers in the United States were feeling, where China immediately started sourcing soybeans, corn, and pork just in recent weeks from other suppliers in other countries.
Yeah, they stopped ordering the soybeans.
This is a fight that we started.
Right. Yeah. But now the U.S. is raising tariffs on Chinese steel, it says was shipped from Vietnam, in order to evade anti-dumping duties. So this is in addition to that 25% tariff on most steel imported to the United States. They're going to be raising it just on that particular area.
One thing I want to point out about ZTE, because we've talked about it at length on this program. So we are saying that we will remove the ban on U.S. companies selling components to ZTE. In return, ZTE would be forced to make big changes in management board seats and possibly pay significant fines. My question is, how is this any different than the punishment that was laid on ZTE to begin with? Because ZTE originally agreed to pay a $1.2 billion fine and then punish the employees responsible. Well, this is basically a group of shell corporations. China and ZTE basically lied about it. They didn't carry out the punishments, and then they got caught. And instead of punishing the employees responsible for selling basically American technology to Iran and North Korea, they paid them bonuses. They didn't punish the employees. They got paid bonuses.
But look, the bottom line is they go to Beijing. They have this set of demands. Part of the set of demands is stop stealing our intellectual property, stop forcing the transfer of technology. And the Chinese demand was help ZTE, reverse what just went down on ZTE.
And China got what it wanted.
China got what it wanted.
What did the U.S. get? And, you know, the thing that puzzles me here is, where is the president? We talk about all the infighting with the president's advisors. You know, he, like you say, he was the one who kind of started this whole spat, and he also said that there's going to be a little pain involved, and you know, Americans have to be patient with the pain that comes from this. But you know, now here we are a few weeks later.
I mean, I think everything you see or read, report on from the president's point of view, that the only thing, not the only thing, but close to the only thing that he cares about here is the trade deficit. He literally sees it as a scorecard and how things are looked at. And if he can get that number to come down, he's not going to get the $200 billion. It's almost economically impossible to get the $200 billion. But if he can get that number to come down, his way, he could claim victory there.
See, I don't think so. I think he does care. I think he does care about these issues. I think he cares about the theft of IP, and he cares about the forced transfer of technology. But he's trying to make the trade deficit sort of the gauge of, did we get anything done? Because if it goes from 375 to 200 billion in terms of a trade deficit, it looks better.
So he wanted that 200 billion reduction in our trade deficit. But John raised this issue. We only export $170 billion a year to China.
Right.
Well, not only, but so how much more?
You couldn't do it.
You can't. You can't financially more than double what we already export to China. So what did we get? We were talking about those agricultural products, increasing the purchase of our ag products by 35 to 45% a year. That's $8 billion a year. Yeah. So we're going from 200 billion to 8 billion. Yeah. Let's put a number on that.
And we should also say that these are global commodity markets. So, you know, China maybe, you know, buys some liquefied natural gas from us, but these are global markets. You know, maybe they're buying less from somewhere else in order to buy more from us. The price doesn't change. If overall Chinese demand doesn't change, then the price doesn't change, and we don't end up getting a lot more out of it.
What's the wonky economics word? Fungible.
Fungible.
Yeah, right. Yeah. So money and commodities are fungible.
I think we all agree the U.S. is getting the bad end of this deal once again.
Well, I don't know if
we're not addressing the most important things for the American economy: the IP theft and the transfer of technology. That's just not addressed yet. So we'll see. Maybe there's more to come.